Good afternoon, everybody. Hope you're all doing well. My name is Mark, and I am the stock market jobber. Today, we're going to look at DraftKings for a few minutes. I have a pretty extensive background in trading. I was a head of three different institutional money managers trading desks where we had all kinds of strategies, hedge funds, arbitrage. I traded directly for the great Steve Cohen and also for the great Mario Gabelli. So when it comes to trading, I've been around the block a few times, and now I'm trying to teach people. And one of the reasons why I want to teach people is because there's so much myth and mythology out there about how trading works, about how Wall Street works, what really goes on. And I can speak from firsthand knowledge because I was there for 20 or 25 years, and I still have a lot of friends who are in the industry. But in the institutional world, we don't pay attention to things like some of this silly stuff that you might see on some of these other trading channels. No one in the institutional world talks about Fibonacci. No one in the institutional trading world talks about Elliott Wave. We talk about the stuff that I talk about and the stuff that I want to teach you. And that's how to recognize important levels, trends, momentum, and psychology. Those are the four things you really need to concentrate on. It doesn't need to be that complicated. Successful trading is probably much more simple than you think it is, but people try to overcomplicate it. And there's a lot of reasons for that. One is Wall Street wants things to seem complicated so they can charge fees. Some people or try to teach and maybe they're sincere, but they just don't have the background and the experience that I have. Some people are downright frauds. I mean, look at some of these other trading. There's there was Warrior Trading had to pay big fines. There was RagingBull.com had to pay big fines. I don't even think they're in business anymore. But regardless, let's talk about DraftKings and let's talk about what's going on here. So the company had good numbers and it gapped up this morning. Look at where it just slammed into this resistance. Okay, when a market's trending higher, like here, it's because there's not enough supply to fill all of the demand. If you're looking at a chart, you have to understand that we are looking at a graphical illustration of supply and demand, and we're looking at market psychology. Those are the things you need to understand. We're not looking at like astrology or reading tea leaves. Now, notice this. If we go back to August, look at where DraftKings hit resistance. Pretty much at the exact same level we're at now. If we go back to April of last year, same thing. This is what we call market memory. And levels that were important can retain their importance for a long time. So a resistance level is a large concentration of sellers. Now, we don't know if they're big sellers or it's a lot of small sellers, but when the market's going higher, there's not enough supply or sell orders to fill all the demand or buy orders. When we get up to a resistance level, well, all of a sudden there is. The buyers can buy all they want. They don't need to worry about pushing the price up. Now you might say, well, gee, Mark, why is it that a level that was resistance, whatever it was 6 months ago, can miraculously become resistance again? There's a reason for it. It's market psychology. There are people who bought up here who regret doing so and have been holding on to their shares ever since. A lot of those people tell themselves, if this thing gets back up to where I can get out at break even, I'm going to do it. So we have remorseful buyers placing sell orders at the same level they bought at. And if there's enough, the level remains intact. And as we've seen here, that's what happened here. And it appears to be happening now. So some price levels are more important than others. I'm going to show you something here, which I think is also pretty cool. All right, now here we have the same kind of a thing, but in a different way. Here, what was support converts into resistance. This is because of that buyer's remorse. People bought here, and assuming they still hold on to it when the price went lower, a lot of these people regret their decision to buy, and they tell themselves, I want to get out. But I don't want to lose any money, so what I'm going to do is I'm going to sell the shares if they get back to the same price I bought them at. So we have remorseful buyers placing sell orders at the level they bought at. Here we have the opposite. We have resistance converting back into support. Here and here. This is remorseful sellers. People sell, and when the market moves higher, a lot of these sellers tell themselves, you know what, I made a mistake. I shouldn't have done this. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price that I sold them at. So we have remorseful sellers placing buy orders at the level that they sold at, and that converts a resistance level into support. So just remember, everybody, it doesn't need to be as complicated as you probably think it has to be. The greatest traders in the world make a lot of mistakes and they lose money on a lot of trades. The difference between a great trader and a not so great trader is the great trader doesn't take big losses. All traders take losses. It's just part of the game. Just like if you play basketball, you're not going to hit every shot. If you're a golfer, you're not going to get a hole in one on every par three. So having a loss is part of being a trader, but you have to make sure your losses are small. You have to get out of the position when it goes against you. This is all part of that market psychology. So the best traders have break evens, small losses, small gains. They all offset each other, and the great traders have really big gains. The average trader, they have they have break evens, small losses and small gains, but they have every now and then they have a big gain, but they have big losses. So if you can eliminate those big losses, then that's your key to success. Worry about the bad trades, and the good ones will take care of themselves. So if you visit my website, stockmarketjobber.com, and you go into market lessons, I talk a lot about psychology, and we're going to be really building out the site over the next couple weeks or so. So please remember to subscribe, and thanks everybody. I will talk to you soon.